Well, let's delve into all these events out of Kenya with Wangari Muikia. She is an Africa Fiscal Policy Specialist and Managing Director at Expertise Global. Great to have you on the show with us today. Now, as we just saw, the CBK has decided to cut its interest rate for a second straight meeting. And that, of course, is in light of that stable shilling we've seen so far and, of course, easing inflation in the country. So what's your take, or what does this reveal about the current confidence in Kenya's economy?
Thank you. That's a really great question. The CBK has done an excellent job at managing the policy, the monetary policy, which is the management of the CBR and the circulation of money in the economy. And because the CBK has demonstrated itself to be such a good, strong institution, the confidence in the economy immediately goes up. So the CBK is sitting proud. The central bank rate, which is the money, the rate at which the central bank lends to financial institutions, shot up to 13% early this year to kind of stabilize the economy. And now that the economy is somewhat stabilizing, it has recognized that because the economy is under duress, that it needs to lower it. And although the expectation was by 25 basis points, it actually went much lower. Now the CBR is 12%. So the confidence in the economy is very high, especially because of a strong institution like the central bank.
Well, I'd like to get a sense of your outlook because essentially, what do you think will be the fundamentals that will drive Kenya's economic performance going forward, especially in light of both local and international uncertainties?
Well, now that we have established that we have a very strong institution in the central bank, I think we need to pair that with very strong fiscal policy in terms of how the National Treasury and other institutions are managing a fiscal policy. So we need to see better management of expenditures. We need to see responsible revenue raising. And that in turn will now spur more jobs. It will spur more services and provide a very good business environment for doing business. But also now we need to also turn and look at the debt situation. How can we manage high levels of debt, making sure that we are able to, turn the money from revenue raising to service provision, and at the same time manage corruption, because corruption continues to rear its ugly head in Kenya and steal away a lot of the resources from the mouths of its citizens. So if we're able to stabilize that and also make sure that we have political stability, which, as you mentioned, we're going through an impeachment process right now, and Kenya is in a season of a lot of political turmoil. If we're able to stabilize that, then we can focus on providing services to the people and restoring the dignity to Kenyans and Kenya and its citizens.
I just want to focus on those local uncertainties you were discussing there. How much of a risk do you think this current political uncertainty, such as you mentioned, the impeachment of the deputy president, or the looming impeachment of the deputy president, also unhappiness with the current administration, how much of a risk do you think this poses to Kenya's outlook and, of course, the country's overall macroeconomic stability?
Well, it poses a very high risk, to be honest. I mean, we've already had times when we had a lot of unrest and political tensions. If you look at our elections in 2007, you look at our elections in 2012, we had a lot of disruptions in the economy. And even just the other day, we had the Gen Z protests. And in the midst of that, we had kind of turmoil in the economic environment. So if we see this continually happening, all of the macroeconomic gains that we've seen, speaking of what the CBK has done, can be lost. We can have currency depreciation because there'll be no demand for our products. Imports will go low. Inflationary pressures will go high because there'll be a lot of money in the economy, and the prices of goods and services run the risk of going high, even though we've stabilized them right now. I think it's about 3.6% within the right band. So if we're not careful, we may undo the good work that has been done. Foreign direct investment, of course, if nobody wants to invest in a country where there's instability because you might lose your investment. Furthermore, there may be spending delays. Kenya is really known, we're kind of internally, spending delays happen often, and these could now further be exacerbated by political instability and uncertainty. That, coupled with strain on business and business environment and lower consumer confidence, could really, they all kind of linked to each other. So if we are able to manage political uncertainty, if we're able to rein that in, then there's a chance that we may be able to manage our macroeconomy much better and continue on the growth path that we've been on.
Right. Well, I'm curious to know, how do markets, investors, Kenya's creditors, how do they all feel about this current political uncertainty, this environment, this move to impeach the deputy president, and the seemingly growing discontent with this administration?
Well, understandably, the markets are quite jittery, even internally, as we are watching this, the impeachment, which is actually currently going on. We are watching with a lot of interest because this is the first time this is happening in our nation. We've never seen this before, where a president has been, a deputy president has been impeached. So we're watching with interest, but with also a lot of trepidation. My WhatsApp is blowing up with messages of what's happening. So people are tuned in and really highly watching what the process will turn out to be. I think coupled with that, there's been a layer of an unpredictability with this new regime. The new Ruto's government has been in place for about 2 years, and we've already seen a tumultuous kind of environments in all aspects, the economy, the politics. We've seen things like the fertilizer scandal, the NHIF health program, the new social health agency that has been rolled out has been having some challenges. The university, there's a new university funding model that is also causing some unrest. The airport is going through a PP. There's a lot of, just to say, there's a lot of different things that are moving in the economy that is really, in addition to the impeachment, causing a little bit of instability. So if this continues, and if we see this continue for an extended period of time, then we will start to have a very what investors will term as an uncertain environment, and lower, and investor confidence, as I mentioned before, will be lowered. The policies themselves, of course, the government in the 2 years, of course, have also been quite challenging. So, for example, I already talked about some of the policies that are being rolled out. The finance bill that was under such protest by the Gen Zs. Those kind of policies in terms of revenue raising are being questioned. Some of them even affecting the core industry of agriculture, where, like, for example, the seed lending program, where farmers are able to give seeds to their neighbors, is being stopped. That causes a lot of instability with the people who are actually running and pushing the GDP. So if we're not careful, and if we don't manage this well and really manage our political situation better, there runs a risk of everything being undone. I'll give you an example of what happened in South Africa when they're during the tenure of Jacob Zuma. There was a lot of political instability, concerns of corruption, and that resulted in a loss of investors. And even if you look at the mining and agriculture and manufacturing sector, those were hit very hard. And I think if we're not careful, we might see something happen the same in Kenya. But I have a lot of confidence. I hope that this will go well. It will be well managed. And if Kenya is Kenya, we'll see us rise again and manage this well going forward.